Thanks for joining us. I'm Marlon Bowling on a very exciting Tuesday. Crop Progress Tuesday, we tend to call it here. We had the National Harvest Progress numbers that we had put together yesterday. In case you missed it earlier this morning, we can take a look at what those numbers are from a national perspective. And for the corn, we had 25% of the crop now harvested, and that would compare to their average of 24%, so about right on pace on the corn harvest activity. If you look at soybeans, 38% of the crop already out of the field, and that compares to a 28% average. So they're making good progress on the soybean harvest as well. Cotton harvest, 17% done. That is a bit of a concern with the approaching tropical weather. The average pace is 20%. Let's go ahead and get you updated on what's going on elsewhere in the markets here. We had an overnight export sale announced this morning. It was soybeans, and it was 154,400 tons to unknown destinations. On the corn market, with quotes provided by Bar Chart, December corn still 7 3/4 higher at 387 1/4 per bushel. On the soybean trade right now, you have the November contract 25 cents higher at 1046 1/2. And we have January now 23 cents higher. Well, let's go ahead and check out what's going on in the wheat markets here. And we'll begin with the Chicago December contract. Right now, it is trading 15 1/4 higher at 599 1/2. It did get above $6 momentarily, not quite there now. Kansas City December up 17 at 541 1/4. And in the spring wheat market in Minneapolis, we have December 90 higher at 544 1/2. Brian Hoops joins us now. He's the president of Midwest Marketing Solutions. Wow, Brian. I mean, all I can do is say wow in the middle of harvest with these huge fund positions the way they are. And here they're pushing the long side even further today, apparently. How do you read the tea leaves today? What's driving this?
Yeah, good morning, Marlon. There's a lot of talk here with Brazil having some really dry conditions that farmers have held off on planting any crops in northern Brazil, and particularly soybeans. And now the trade is concerned that China's, instead of just buying through January as they normally would, they're going to start buying U.S. soybeans into the February timeframe to make up for the soybeans that will not be ready to be harvested as they normally would because of delayed plantings. But there is rain in the forecast for the middle of October through the end of the month. So it does look like China we'll be looking at U.S. Soybean values here as a buying opportunity. There was rumors on Friday that they had bought 3 to 5 cargoes. We haven't heard any confirmation of that yet, but this morning's Newswire announcement of an unknown destination certainly could end up being China. So trade is really factoring in a lot of bullishness going into Friday's supply and demand report. And there's a lot of variance on expectations as far as yields go and ending stocks for that matter.
What about the big move, especially in Kansas City wheat this week, Phil?
Yeah, there's dry weather not only in parts of the Ukraine and in Russia, where they're finishing out their crop, but also where we're planting wheat in parts of Kansas, Oklahoma, here in Missouri. It's been very dry, no rain in the forecast, so we're adding some weather premium in because of that dry weather. The producers have seeded about half of the crop nationwide, but the rest of that crop is going in either very dry dirt or forecasts that do not allow for much chance of moisture. So there's a concern here that this crop, we want it to get it seeded. We need to have the acres seeded, and if this crop is poor going into dormancy, or if it doesn't get seeded at all, that the crop may not be planted or ripped up in the spring time frame and planted to something else if we have a very poor crop through the winter months.
Okay, we'll look at our livestock trade in just a moment. We're talking with Brian Hoops, and we'll be back after these messages. Let's go back to Brian Hoops. And Brian, I'm just curious, how much impact is that rally in the grain trade having on the overall livestock market today?
Yeah, it really should be pressuring the feeder cattle market with the higher corn prices. And, the market here, I think, is vulnerable in the feeder cattle market because of the increased feed costs. So they've increased substantially since our August lows. Now you have corn about 70, 75 cents off of those lows. So, big detriment to the producers if you haven't locked in those feed costs. Cash cattle trade this week, probably going to be a little bit firmer again, $1 to $2 better as the calls with the show list numbers being down. Strength is coming in the October contract in the front months based off of that expectations for that higher cash trade. And the hog market is October is reacting to that lean hog index. Another week until expiration, index keeps rising as the cash market keeps moving higher very slowly.
And of course, don't forget the limits on cattle have changed today, effective today anyway, and they have nudged them upward a little bit. So $4 on cattle. And anyway, keep that in mind. That would mean expanded limits of $6 now on live cattle moving forward. Brian, thank you for the time. Appreciate it. We'll talk with you again real soon. Brian Hoops of Midwest Market Solutions. Let's get you updated on our current futures and December live cattle still 37 cents higher at 112.12 per hundredweight, still about 80 cents off our earlier high. In the feeder cattle market, you have November 87 cents lower now at 139.05. So they pulled the rug out from underneath that one. It was up at 140.92 and now sold off after the rally in corn. Lean hogs, well, you have December now up $1.47, trading at 64.12 per hundredweight, about a $0.50 from our high of the day. Christina?